We're good? Oh, we're all good. Hi, everyone. Just wanted to start by giving you a very warm welcome to our event tonight, and thank you very much for coming in a bit of a drizzly evening. And also thank you to everyone who is joining from home on the online stream too. My name is Grace Harrod, and I am a high growth advisor for FinTech Scotland. I work primarily on the Financial Regulation Innovation Lab, which is very much a mouthful, so we shorten it to FRIL, which is a publicly funded programme co-run by the University of Strathclyde and the University of Glasgow and FinTech Scotland. Our aim is to promote the Scottish RegTech ecosystem through investment collaboration with financial services industry. Now, to continue the thank yous, I just would like to extend a very warm thank you to Lloyds for hosting us this evening in this beautiful room, and also for providing the drinks, and of course to Teradata for providing the pizza, which I can see has been a massive success. Now, just a bit of housekeeping to start. There is no fire drills scheduled for this evening, so if you do hear the fire alarm, please make your way calmly and slowly out the main fire exit, which I imagine is that big door just there. So this event is part of the Data Lab community, which is a community of over 7,000 data and AI professionals, students, and enthusiasts. They run regular events and webinars, and it's a place where you can find like-minded peers, ask questions, and gain support. And the best part, it's all free. Thank you to Data Lab's partners and funders for the support of supporting Scotland's data community. So, a bit about tonight's event. So, this evening we're here to discuss what it takes to deploy AI in the financial sector. AI and data are no longer just tools, they are reshaping the entire industry. However, the move from task-specific use cases into enterprise-wide impact is more complex than just plugging in a bit of new tech. Challenges include legacy systems, siloed data, and the balance between innovation and regulation. We're delighted to have voices from across the industry tonight to discuss this topic a little bit deeper. So we will have about a 40-minute panel discussion, and there will be time for Q&As at the end, so please take note of any questions as we go along, and we'll try to get round to as many of you as possible. And there'll also be some time later for some networking too after the event. So, without further ado, I'm going to introduce the panel that we have this evening. Firstly, we have Dave. Dave McCallum is a data and AI lead at Accenture. Dave McCallum is a senior manager in Accenture's data and AI team with over 15 years consulting experience, primarily running large delivery in banking and wealth management. He has a proven track record in leading complex transformation and data management programs, bringing together strategy, delivery, and stakeholder alignment to create lasting business impact. Secondly, next to him, we have Vinay, IP&I Data Director and Foundation Business Leads at Lloyds Banking Group. Vinay is a passionate technology leader who drives on creating real impact by transforming how businesses use data, AI, and digital ecosystems to put customers in control. He has a track record of delivering large-scale transformations that simplify systems, unlock automation, and drive meaningful outcomes for both customers and businesses. And finally, we have Martin Willcox, Vice President, Industry and Analytics at Teradata. Martin has nearly 3 decades of IT industry experience and has been recognized twice in Data IQ's Big Data 100 as one of the most influential figures in data-driven businesses in the UK. Since joining Teradata in 2004, he has helped more than 250 organizations across at least 6 industry verticals to do more with data and drive business value. Apologies for reading that off, but I just wanted to make sure I gave you all the credit that you deserve. So thank you very much for joining me this evening. So let's dive straight into the conversation. This first question is aimed at all of you, so please just take it away as you feel you wish. So AI is often described as transformative, but what does AI at scale really mean in the context of financial services?
Yeah, since I have the mic, I'll start probably. I think the best way to think is when a customer logs into the banking app, it doesn't think, is my bank running AI at scale? What the customer is thinking is, can my claim get settled faster? Is my pensions being explained in the right way? is my money protected? So that's really what the customer is thinking. So when it comes to AI at scale, right, we are talking this proverb called AI at scale, just because at the time in the journey we are in with this tech. So to me, AI at scale is nothing but when AI gets embedded into the core processes, so that it quietly improves those millions of everyday moments for our customers. And when that happens, we think it's AI at scale.
Yeah, so just to expand on that, I think from our side, it's getting away from kind of siloed use cases and really driving, reinvention of your organization. And, I think AI can make a huge difference in the business, how we form our business strategies in banking and other FS organizations, and how we operate. If you think in FS specifically, the level of change we went through when digitization came in, it changed the way we, communicate with our banks. It changed the way we operate with our banks. And, whereas that brought kind of like instant money management and convenience, AI will make it intelligent, proactive, and, deeply personalized. And I think, for the organizations, that means, seamless onboarding of new clients. It means highly personalized new customer products and services. It means instant fraud detection, which will increase our compliance. So I think to echo the point, the winners in this space will be the institutions that make it kind of feel seamless, secure, and human. And those that will be left behind might just be treating AI as an add-on to existing processes. Anything to add?
Yeah, I really like both of those answers. Thank you. Maybe I'll give you a specific example, though, because there's always a risk in these conversations that we can talk very generally, right? So we did a big project recently with a large Asian bank. They're a pretty significant bank, the largest and most profitable bank in their particular market. But they have had a bit of an NPS challenge for the last couple of years. And they take the view that NPS challenge has been causing them issues in customer retention and cross-sell. And so we were having a conversation with them about, well, how could we help? Because we own the data platform at that particular institution. How could we help with that challenge? And it turned out that even though the bank was very focused on NPS and trying to improve NPS, they didn't really have a very good understanding of the drivers of NPS. And it also turned out they were capturing 50,000 chats per week through their mobile banking and online banking application, to go to your point about being customer-centric and thinking about how customers interact with a modern bank. And exactly none of those 50,000 chats per week were being systematically analyzed to try and understand what customers felt about those interactions with the bank. And I don't think that's very unusual if we're actually super honest with ourselves. I mean, it's not exactly a new insight, is it, that there's a ton of value in unstructured interaction data, the things customers say and do with us before they transact with us or choose to transact with somebody else. But we haven't been very good at unlocking that information because the methods available to us have been horrid, right? TF-IDF is not great for those of us that have used it. And what's really different and transformational about the current generation of AI technologies is they're really good with unstructured data. I mean, really, really good with unstructured data, right? And so we took the 50,000 chats per week that this organization is producing. We vectorized them in the database. We could then cluster those chats to try and understand the different types of issues and opportunities that customers were having with their interactions with the bank. Then used a large language model to try and create descriptions of those clusters. And in that way, by applying that process continuously and in near real time to the data as it arrives, we can literally see what's driving the customer satisfaction with the bank in near real time as they're engaging with the bank. And that solution is now processing 50,000 chats a week. We're hoping to roll it out to support 350,000 transcripts of call center interactions per week. What's that? 21 million interactions a year that previously weren't being leveraged to understand the customer journey, that are now being leveraged to understand the customer journey of that institution. And I really like that example for three reasons. The first is it really is an AI solution. I think if we're absolutely honest, again, there's a lot of AI washing in the industry right now, right? Stuff that we would have been happy to describe as traditional machine learning 2 or 3 years ago. Well, the vendors want to call it AI because that's what you want to buy. You call it AI because your board doesn't sign off a program unless you put AI in front of it, right? So we're all guilty of this, but this really is an AI solution. Couldn't have done it with TF-IDF and frequentist methods 5 years ago, even if we'd wanted to. It's the new generation of language models that make this solution possible. It really is a scalable solution. You can't hire enough smart people to read and analyze 21 million customer transcripts a year, even if you wanted to, right? That's scale for me, 21 million conversations a year. And then the last thing, it really is a solution. It's a solution to a business problem that the bank has. And I think, again, one of the things that a lot of us are guilty with, in our enthusiasm to experiment with the technology, we take a very technology-centric approach. And we don't actually think about, well, how should I be using this technology, to your point, to actually improve the core processes and operations of the bank, and preferably to make the institution some money. So I think that example is really illustrative, and it's a good example of the kind of work that we're doing with clients.
Fantastic. Thank you so much. It's great to hear from you. I personally took a bit of a break from financial services. I've just come back into it. And the conversations really shift from efficiencies and how can we save money to how is it actually going to affect the customer, which is like a really refreshing thing to hear personally. And that's great that there's so much focus on that just now. And you're right, Vinny, that's what the people want. They don't really mind what's going on underneath. However, my next question is going to try to turn a bit back into that again. So Vinny, I'm coming to you for this one. Just to lift the lid a little bit on actually implementing and instilling these AI tools within a bank, it would be really interesting just to understand how do you balance the push for innovation against the realities of operating at an enterprise scale? I know it's a struggle, I'm ex-Barclays, I know it's a struggle that a lot of large financial institutions like Lloyds face. So just be great to get your input on that.
I'm really glad to have this question. One, because in my previous life, I did looked after innovation for 2 large British companies. One at Prudential, so I was their Chief Innovation Officer, and before to that, BT. And this question has always put in front of me, innovation versus scale. I don't think it's a trade-off, it's one versus other. If you think like in our normal life, right, and it may be a bit woolly, but in our regular life, right, we have friends who are exciting, and we have friends who are serious, and we need both. So innovation is exciting, but scale is serious, and we have to have both, right? We need to dance with both of them. Now, how do we really and this is not a typical banking answer, right? This is based on my experience running both of these aspects. It's a delicate, fine balance, right? And how do we really get the balance? That's where the trick comes in. Right? And to me, practically, the first thing is being intentional. Right? So we have to be intentional in innovation. And what I mean by that is, in Lloyds, specifically, we encourage innovation where it impacts the customers and colleagues in the right way. So it can change their outcome, right? It gives a pretty faster claim settlement. If I can really assure someone for their life faster, really without going for those 30 days underwriting process. So that's where we embrace innovation. The second thing is we do encourage experiment, and we have got a proper life cycle around it. Right? In case of AI, we call it POC, and some of the team who has built it, they are also in this room. So that life cycle is POC, proof of concept, POV, proof of value, and then scale. So POC is, as you can know, right, all this, people call it, I call it pilotitis. So, right, keep doing pilots. But then we move to POV, and that's where we really test it in a controlled environment. And that gives us a lots of learning. And when we realize that, yes, this is the right thing, then we scale it. And why I'm calling then we scale it? Because what's really stopping us, right? So going back to your, right, in general life, after 2022, we are all in this room using one or other sort of AI. It is hyper-scaled already. So tech isn't a problem, scaling tech. The problem is, and actually it's not a problem, that's the accountability on us as the largest integrated financial service provider in this country to really ensure the trust the reliability, and the regulation. So when I say scale, I don't care about technology, right? There are many technologists in the room, including myself. I spend most of my life doing those bits. This is about how do you really put it on the scale of trust, risk, and compliance, right? And through it, right? So all through responsible AI, right? So this is what we are doing, and I think we are doing pretty successfully. Right? And one thing we always forget, and I think is really, really pointed out well, is in the hype cycle, we just jump onto the tech, right? And hence, there is so many pilots running, right? And you must have read something recently came from MIT, 95% of those pilots are doomed. It's not because tech is flawed, it's just because we haven't really thought through how do we use it, right? The usage, the context, the intention around it. So when I say scale, we miss the most fundamental part, which is unless you have got a strong data foundation, forget about scaling. There's no way anyone can scale it. Right? You can keep doing pilots, right? Keep like bringing some shiny, bright lights, some kudos from the board, but that's all. So I think to answer your question, right, one is must have proper data foundation, and we are investing in it. Yeah, just so that you know, all of our data will be in cloud, connected, and accessible by next year. We are not far away from it. When I say our, like, I only look after insurance, pension, and investments from the Lloyds banking group, but there is a much bigger program happening at the group level. Yeah, and that is what giving us the value that, okay, we will be able to scale AI, and we have started on it.
Can I just come back on that data foundation point just quickly, and then I'll make a quick point about culture, if that's okay. So I love the focus on the data foundation, as you would probably expect, working for Teradata. I'll make a prediction, and predictions are really difficult and really dangerous at the moment, right? The only thing we can say with certainty is that 50% of the predictions we make will prove to be wrong, because the field is moving so quickly. But I'll make a prediction. I predict that all of you working for a financial services organization in this room will have to vectorize every single piece of unstructured interaction data, calls, emails, texts, chats, call transcripts, within about the next 5 to 10 years. And I think probably closer to 5 years than 10 years. And I think actually you might have to not just vectorize every single piece of unstructured interaction data, but you might find you have to vectorize that data with 4 or 5 different models and 4 or 5 different chunking strategies to optimize for different use cases. And now let's remind ourselves that 80% of the data in your organization is unstructured. If we're not intentional, to use your expression, if we're not intentional about the data architectures we build, and if we vectorize that data on a use case by use case basis, the explosion in data volumes in organizations is going to make the big data era of a couple of years ago look like child's play. So we've really got to make sure that we've got a strategy for creating the enterprise vector store. And every real world use case that I've seen involves multiple sources of structured data being combined with a vectorized representation of at least one source of unstructured data. This is going to be a really strong case for co-locating the enterprise vector store with your data lake house, your enterprise data warehouse, whichever data management strategy you have in your organization. And I think the organizations that don't think that through are setting themselves up for a world of pain, honestly. There's a billion-row vector store in your future if you work for a large organization. And you'll be a smarter organization if you have 1 billion-row vector store that supports multiple use cases rather than 10 or 12 billion-row vector stores. The other point, just to your point about, I love the analogy about exciting friends and boring friends. I'm trying to think which segment I fit into.
Serious friends.
Serious friends. I think a lot of the customers that I work with are taking a portfolio management approach to their AI projects. If you're not taking a few moonshots, then the risk is you get out-innovated by your competitors that are, right? So we need to have some moonshots in the project portfolio. But then, of course, the risk of failure associated with the really ambitious projects is higher as well. So we also need some roof shots in the portfolio. And having a balance between those kind of roof shots and moonshots is an important strategy for a lot of the organizations that I work with. And then the more subtle thing, I think, is the teams that we ask to take on the moonshots, we've got to make sure that they're not taking personal career risk when they say yes, right? You know, if we accept that we're doing some of these projects and we're setting off knowing that there is a risk of failure, it becomes really, really important that those individuals, those teams, aren't punished if those projects don't work out in exactly the way that are expected, because then we encourage incremental approach in the business, right? If the way to make your career is by not taking any risks, then guess what? Nobody takes any risks.
Great, thank you so much. That also what leads into my next question really well. Starting, and Dave, I wanted to come to you for this one. Just, I think it'd be really interesting from your perspective at Accenture, but what sort of shifts in mindset or operating model do you see essential for banks to move from pilots to AI at scale? And Martin, you've led us really well into this question, so really good to hear what you have to say as well.
Yeah, absolutely. So, I mean, as with most things, like the human element is the most difficult part of embedding lasting change. And I think that's even more pertinent in an AI world, because just the sheer pace that it's moving at, everything's changing all the time. We can no longer run 1-2 year programs because they're outdated before you're halfway through. So to your point, and I think, both Vinay and Martin made a good point of about the POCs and POVs. We still need them. 3-4 years ago, that's all anyone was talking about, because that's all we really knew at the time. And they're still pertinent. We still need to prove value, still need proof of concept so we can get buy-in at the right levels, etc. But to get these production level ready, the strong technical foundation is essential, but I won't discuss that because that's not your question. But
feel free to go.
in terms of organizationally, I think key is leaders really engage with the organization about their strategy, how it's underpinned by AI, and how they're going to execute it. What's the team's role in that? How can they reshape their workforce? And because I think it's an area that there's a lot of kind of concern and anxiety in, not just in kind of our environment of financial services, but my brother-in-law who's in graphic design is thinking about his career and where he's going to go with it. So there's a lot of anxiety around it. So I think it's really imperative that leaders act from above and really communicate their strategy, their vision, how they're going to execute to the teams. And it doesn't matter how many times you say it. You need to drill it in because that'll get people motivated and thinking, right, well, I can really accelerate my career if I can get ahead of the game on this and really make a name for myself in this space. Another is driving continuous reinvention. To my point earlier, it's moving so fast that if you get the head down and you've devised your business strategy and you're going towards it, you need to keep looking up to see, well, what advances are there in the technologies in the industry, and are we staying ahead of the curve? In terms of the op model itself, we're encouraging clients to go to a more federated op model with cross-functional teams. That way we're getting the likes of product owners, risk teams involved throughout the life cycle, because at the end of the day, to get these into production is going to be a lot about kind of A, having the right solution, but B, having the right guardrails, guidelines, and standards around them. So them being at the forefront of that is really important we're seeing more and more clients make that shift into a more federated model, or at least transitioning that way.
Yeah. That's perfect. Yeah, Martin, on you go.
Yeah, I'll pick up on a couple of those points if I may. So I think the question is ultimately about what are some of the blockers that stop us getting from those proof of concepts, those proof of values into full production. And I think that's obviously a very big question, but there's kind of 5 issues that come up a lot in the work that we do with clients. I mean, at the risk of repeating something I said in response to the first question, cool technology demonstrations with no real link to business value. Those can be a challenge. An old boss of mine said years ago that if you take an old business process and you add new technology to it, what you end up with is an expensive old business process. And I think that's a piece of learning that often gets lost, and we often find ourselves making that mistake over and over and over. I think a lot of customers are concerned right now. They feel like they're being asked to make technology choices with some new technologies that they're not familiar with. In very many cases, most of those technologies can't handle the entire end-to-end workflow. So we've got a changing technology landscape. We've got to make investments in technologies that we don't necessarily understand. We've got to think about how we integrate those strategies. And, that is a risk. That is difficult. And some of those technologies that we're very excited about today will probably be less excited about a couple of years from now because the field is moving so quickly. Technologies that demo really well in innovation lab settings but don't scale to production. And we keep coming back to this idea of scale. So let's expand on that in a moment. So I already made one prediction. There's a billion-row vector store in your near future. Let's think for a moment about the implications of deploying AI agents widely in large organizations and in society. So we're working with some healthcare providers in the US that start to think about an individual agent for every single patient of the hospital network, whirring away in the background, looking at the individual's data, looking at their health data, understanding trends and changes in that behavior, comparing it with the cohort, comparing it with new medical research, essentially trying to predict the risk of particular outcomes, good and bad, nudge the patient in the right direction, and if that doesn't work, then kind of alert the physician that we might want to have a chat with Martin about his risk of prostate cancer. Now imagine that. So that particular provider, I think, has got 10 million customers. So you're talking about 10 million agents in the background running continuously. Those agents are going to have a lot of questions. And that means a lot of queries to the back-end data platforms. So when we talk about scale, we've really got to think this through. I think there are lots of scenarios where you can easily imagine order of magnitude increases in query volumes to the back-end data platforms to provide the agents with the context that they need to make smart decisions. So what happens to your service level goals if you've got a 10x increase in query volumes in the next 3 years? What happens to your TCO if you've got a 100x increase in query volumes in the next 5 years? That's not an outrageous prediction given where we are right now. The other issue, obviously, is poor quality and siloed data. We talked about the importance of the data foundation. It's a cliche, but sometimes cliches are cliches because they're true. This is the 21st century manifestation of the garbage in, garbage out problem. If we've got poor data that we're using to make inferences or poor data that we're using to train or fine-tune models, we're guaranteed poor outcomes. And then the other issue that I think is particularly important for a lot of you in a regulated industry is thinking through governance and control. How do we explain to the regulator how we've made the decisions that we've made, what we've done? How do we protect against bad outcomes? I don't think any of us are in a position to say that our AI/ML solutions will never do harm, but how do we try and make sure that they do no harm? How do we understand if harm is occurring and try and shut it down as quickly as possible? And how do we stop those risks propagating at the speed of light, literally? That's something we've really got to think through, especially in the regulated industries.
Great, thank you very much. That leads on to my next question really well. Originally, actually, Martin, I'd sort of direct this at you, but having listened to Dave and Vinay, I think it'd be interesting to see your perspectives as well on this. But you touched on there about the struggle with siloed data and also legacy systems as well. In your experience, what's the most effective way to unlock value from that fragmented data without sort of ripping and replacing everything? Because that would just be just a massive project to undertake. So, Martin, it'd be great to hear from your perspective initially, but also, Vinay, from your perspective, given the program that you've been running to get sort of your data into a place where you're ready to sort of go with the AI. It'd be interesting as well. And also, Dave, from a consultancy point of view, if that's something you've helped clients with or have seen as an issue.
I mean, this is a big question, so I'll try not to hog the mic, and I'll give a straight answer, and then I'll maybe give a slightly challenging answer. So, I mean, the straightforward answer comes in two flavors, right? And the first way of attacking a disparate data estate is the use of virtualization technologies. We have one called QueryGrid. Other technologies are available, but ours is better. Those used intelligently, those virtualization technologies can enable you to play data where it lies. Now, they have strengths and they have weaknesses, and AI doesn't change the laws of physics. Moving large data sets around a network is problematical, particularly for complex analytics, so they are more appropriate for some use cases than others. But those techniques and those technologies can go a long way in some cases and for some use cases. The second answer, I guess, is really, I think, one of the reasons that we're all incredibly excited about MCP. MCP has the ability to abstract data representation and location from the AI agents that need to access it. And you start to think about MCP, or you start to see MCP being thought of almost as a data abstraction, as a data integration strategy in some organizations, as a new API strategy. And I think that's an incredibly valid use of the technology. Again, I think it will have limitations where we're processing large data sets. I don't think MCP should be thought of as a data integration strategy, but as a way of abstracting the complexity of where data resides in disparate silos. I think it has legs. And I'm very excited about the technology in general, by the way, as a way of connecting agents to the context that they need in our back-end database platforms. That's the straight answer. I guess the more challenging answer is we need to have an honest conversation with ourselves, don't we? Because we say that we don't like to rip and replace technologies, but actually we're addicted to ripping and replacing technologies. The reason that we've got disparate data silos is because we can't stop ourselves from ripping and replacing technologies. I bet a good steak dinner, I can count on the fingers of one hand the organizations in this room that aren't exploring a data product strategy right now and aren't aggressively exploring the use of open table formats. And you should be, by the way, because they're going to be incredibly important technologies. But the challenge that we have is we can't wait to rip. We're just lousy at replacing, right? That's why we've got the complicated estate that we've got. And I think AI is going to have two interesting implications that are pulling in slightly different directions. The first is it's probably going to get easier to consolidate some of those disparate data platforms. One of the superpowers of the technology is code generation and refactoring, right? So the barrier to integrating disparate data silos is already reducing and is probably going to reduce further. I've got a customer in the US that I have proved I can migrate their complicated landscape to a Teradata platform in a low number of months for 1/10 of the price that it would have taken them a couple of years ago, and that I can save them millions of dollars per annum in the process. So I think some of you that have been wanting to centralize more of your data assets but have persuaded yourself that that's too difficult and too expensive might revisit that equation in due course. Of course, the force pulling us in the other direction is it's never been easier to spin up new data silos. The same technology that makes it, that same code generation technology can also be used to spin up new databases and new data platforms. And you see a lot of vendors investing in tech startups that are intended to do just that. You know, our databases are going to have more AI users than human users in the not too distant future, right? So those two forces are going to pull us in different directions, I think. But I think I keep coming back to the point that Vinay made, that scalable and flexible data foundation is really, really important in this discussion.
So I won't dare to touch tech because Martin has already given a lot around it. I think it's again an art. You can spend, right, so I had a team meeting with my leadership team exactly in this room. And we were talking about how code refactoring can accelerate some of our data sets to move into cloud. So something we thought like we'll go to next year, right, we want to do like this year, right? So that's the kind of scale and speed we were talking about. MCP, I'll share my judgment for next day, not today. I think my practical suggestion is just stay focused on monetization. Otherwise, you will spend millions from moving water from one bucket to other bucket if you're really not careful. And that's exactly the approach I have taken. So in insurance, pension, and investments, like we have a few hundred data puddles, as I call them. And if I wait for everything to become a lake, I'll be retired. So there's no point. Also, none of the use cases that you think, right, and I'm just using this term very loosely, right? So think the stuff, the matter that connects the customer or which matters to the customer. They need data from one source, right? They need data from multiple sources, derivations, business logic, and then finally decisions. You can call it agentic if you want to, right? But ultimately, this is what is happening today. Even in agentic world, the same thing will happen. So if you stay focused on monetization, stay focused on customer outcome, you will find tactical ways to pull the right amount of data to enable it. Right? Some purists will disagree with it, right? Some will say that, okay, it will add tech debt. But again, this is an art. You'll have to, right? By doing this, what you are doing is you are infusing the confidence that AI can do stuff. Because for execs, Right? So when we look at the business cases, right, we go very high, right, and then it hasn't delivered. It's all like, right, we have just wasted money, just write it off that investment. So that's a typical cycle happens, right? And that's the reason why we actually ended up in puddles, because we started moving water from one bucket to other bucket. In between, the money just dried up, so water left in both buckets. New, again, money dried up, now you end up with 3 buckets. Right? That is the story of any large company. Right? So where, right, again, so everything in tech, right, we have to ensure that the tech is right, because ultimately that's what gives you the resilience. If we want the speed to customers, right, we have to have the modern state, not legacy, not unsupported stuff, right? So they are all basic table stakes, but for AI professionals, right, my only advice is stay focused to monetization. Because if you lose your eyes on this, you're going to lose on it.
Interesting points. And I guess the thing I'd probably add to would be Martin's point about, some of these big dirty transformations that we've known in the past and tried and sometimes failed in, they are getting easier. I always find that, some of the big challenges you face with a large transformation would be not really understanding your source. And we found a lot over the years that, Jim over in the building, wherever, is the only person that knows that data or knows that platform. And I think, we've always been, kind of stung by that, because everyone wants Jim's time and no one can get it. And therefore, these transformations take forever because we don't understand our data in the legacy platform. These things are getting easier. There's tools now that are, helping you with your data management, automated data tagging, reading, defining data lineage by reading the ETL code. AI is helping with these solutions. So these things are getting easier. So hopefully, as things go forward, that's going to be a problem that it won't be a case of ripping up. And hopefully those 1 bucket's going to 2 buckets, going to 3 buckets becomes a thing of the past, because we'll understand the legacy estate better, and we'll have tools to get us off of that legacy estate by understanding the data, having strong data management on those platforms. So I think there's light at the end of the tunnel.
That's good. Great. I'm going to go a bit off piece now. Sorry. I spend my days speaking to fintech companies of all stages. And trying to connect them into larger organizations. Now, a question that I can guarantee comes up in every single session that we run is around procurement, the time it takes for companies to be able to work with large organizations. Now, Dave, you made a point earlier about how we can't be running projects that are 2-3 years long because the technology is moving too quickly. And also, a lot of companies, if we are wanting to engage with them, they don't have that runway. So let's be honest, it's not a feasible way of innovating and scaling these technologies. So I guess, Vinny, I think it'd be interesting to come to you first, but how much focus are you looking on partnering with other organizations within this space versus building yourself internally to create scalable solutions?
I mean, this is a very wide remit, right? Scalable solution means too many things. So our approach to procurement is very clear on this, right? Where we can, right? So it's not about tech, right? That's Martin's job, right? He can build the right databases, right, and tooling, and you can help how to seed them together, integrate them together, right? So our focus is how we can quickly get the value out to the customers.
Yeah.
Whether it is, right, so in some cases we have to build it, yeah, because there is a lot of hype. So take the example where underwriting. From last 5 years, I'm hearing underwriting is like 80% automated, 70% automated. Go ask the big players how much underwriting is automated, right? Simple things in a very simple way. So a lot of hype, little substance. There you have to build yourself because you have to care for your own customers. Yeah, but there are things which are built, like say policy admin systems. There's no point building it. We just did, of course, the program should, I suppose, to finish in 3 years, but we are probably the only one who completed the migration of legacy policy admin systems onto a modern one. We just did it. So I think our approach is really based on what gives the clients the best outcome, right? And that drives everything.
Yeah, I mean, I think the question fundamentally is really about what's the approach that organizations should take to deploy the technology, right? And how and where do you partner? And I think, you know, we're in a moment right now where the solutions aren't really shrink wrapped. You can't really buy, in most cases, AI solutions that you can just drop into those existing complex workflows that you were talking about, Vinay, right? So that someone is doing custom development. And if you work for a large financial services institution and you're sat in this room, then really your decision is, well, is it going to be me? Is our company going to do this ourselves? Are we going to buy the infrastructure and the technology and build the solutions ourselves on top of it? Or are we going to buy solutions? Are we going to ask a provider or providers to provide the technology and help build the solutions for us? And in a sense, that's the same conversation that we've been having with ourselves for the last 30 or 40 years in tech, right? You know, some people do an ERP implementation themselves, and some people pay Accenture to do it, and most of us end up somewhere on a spectrum with those things. I don't think that's going to fundamentally change. What could change, I think, in some quite fundamental ways, is some of the back-end processes in our organization. I mean, you mentioned procurement. I remember when this all started, I saw a brilliant cartoon, a 2-panel cartoon. And on the left, there was a guy saying, oh, wow, look at this cool new technology. I can take one bullet point and turn it into a whole email. And on the right-hand side panel, there was a woman saying, wow, look at this great technology. I can take this long email and turn it into one bullet point. And there is a lot of that going on right now, right? You know, when I started working for a vendor, I used to have to spend 2 or 3 weeks of my life at a time writing RFI and RFP responses. It doesn't really work like that anymore, right? And somebody at the customer would spend 2 or 3 weeks of their life reading all 6 of those responses and scoring them, and it doesn't really work like that anymore, right? And so you can see a whole range of back-end processes, actually, that are likely to be transformed by the application of this technology. And what's going to be interesting, I think, to see, and what I think we don't really know yet, is just what sort of productivity gains we'll get. Are we really going to get some of the productivity gains that we think and we hope for, or are there going to be bottlenecks in the process where we don't trust the technology, can't use the technology, still need the humans to get involved, and that creates a bottleneck? And if you read the business press at the moment, you can find articles saying, this is a technology like no other, and so you can't use the examples of previous technology cycles, and then you can find plenty of other examples saying, this is a general purpose technology just like electricity, and it will be disruptive, it will be transformative, but maybe not as quickly as we think. And I genuinely don't know which side of the fence I come down on that question right now. Ask me again in 5 years.
I guess just from kind of what we are seeing across the landscape, a lot of our clients, I think in general, they're going for simplification. They're going for consolidating platforms. They're going for consolidating providers and trying to get out-the-box solutions from them. But I think to Martin's point, we're still seeing the age-old problem of, you buy the solution, you think it's going to work for you, and then you realize you've got a highly bespoke business that has different use cases and different processes and different everything else than some of your competitors and some of the other clients of these providers, and therefore you have to do some development to them, or workarounds to them more accurately. So we're still seeing that, I think. I think it's getting better. As a lot of the organizations transition into the cloud, they're taking the advice of the providers and say, this is how you set up your data so we can manage, so our tools will work more correctly for you, and less are bespoke in-house builds. So I think it's getting easier, but we do still have that problem of that's not quite working for us. We'll need to build a workaround. So we're somewhere in the middle, but I think, again, it's transitioning the right way.
Perfect, thank you. Now, I think we've got about 3 minutes left. So I'm going to do a quick fire question, if that's okay. If we look 5 years ahead, what do you think will separate the banks that thrive with AI from those that lag behind? Now, I'm going to also just take a note of Martin's comment earlier about predictions, so we can probably disregard about 50% of what you say in the next 3 minutes. So if I could just give you a quick minute each on this, that'd be great.
So I think the ones that get ahead of the game will be really anticipating what problem they're addressing and what they can change for the customer, and not redesigning a process to reduce costs. I think the ones that really excel will be, constantly looking at reinvention and thinking, right, that was our strategy 3 months ago. Should it still be? Like, constantly challenging themselves and making sure that they are keeping up with all the advancements in that space. And again, the design of your technical architecture and your op model has to complement that. If you're going to be flexible as a business, you can't have these legacy estates. You have to, be thinking anytime you're designing your technical architecture, you need to have that in mind, and flexibility be at the forefront of your design principles.
Okay, thank you.
Yeah, I think the difference between a toddler and teenager is 5 years. Same individual, completely different demands. So, however, I think this is going to be 100% true what I'm telling you. In 5 years' time, the winners are not with the one who has got those flashy AIs. The winners are the one to whom customers and regulators are going to trust in. And hence, the winners, right, will be decided because they are the one who really treated individuals, like customers as individuals, meaning getting into the hyper-personalized services and products which they need, rather than bolting on what is built for mass market. Right, so that's what the winners will be. The laggards, right, they will still somehow continue with this mass market stuff, right? And hopefully they have longer life, just bless them.
So we're essentially being asked to predict the future, which we've established is really difficult even at the best of times. And this is a really difficult time to be predicting the future. And I'm a recovering enterprise architect. So I tend to deal in principles anyway. And I think actually principles are a really good way of grounding ourselves at moments of extreme change. So let's think about some principles rather than making specific predictions. Principle number one is that agentic solutions will probably dominate, because at least in the short term, the automation of a lot of processes is how we make the business case for AI. In the longer run, it'll be the organizations that reinvent their business processes. But in the short term, automation is how we make those business cases stack up. So agentic solutions are going to be where the money is right now. And that means particularly in the regulated industries, at the risk of repeating myself, we've really got to think through governance. Principle number two is to do what that Asian bank we discussed earlier did, which is work backwards from the business problem and don't just get wrapped around the technology for the technology's sake. Principle number three is to recognize that the superpower of the current AI models for large enterprises is really making sense of all that unstructured interaction data. My feedback would be that most of the value I've seen in large financial services institutions right now is in applying AI to improve the customer experience. If you're looking for quick wins, that's where I'd go looking for. Principle number four is the data science job changes a little bit, right? If you're a data scientist in a big bank right now and you're used to training a credit risk model, you start with your bank's own data and a library of models and you train a bespoke model. You can't train a better large language model than Meta. So the job changes, right? We're going to be using open source models in very many cases and working out which of those models is the best fit for our particular requirements. And we might be fine-tuning them and we might be putting guardrails around them. But the job changes a little bit and we've got to think about that. And then principles 5 and 6, we've talked about them a lot already, so I won't labor the point, but you've really got to think about the enterprise data foundation, the enterprise context store, those agents you're deploying and want to deploy, they're simultaneously incredibly sophisticated and incredibly stupid. And the way that you make them less stupid and able to deal with the complexities of your organization is connect them to all the data that you already have about your organization and your customers. Scale really matters. Scale really matters. What if you've got millions of agents constantly running 24/7, 365 days a year? It's a lot of network traffic, it's a lot of database traffic. So we've really got to be thinking about scalable solutions from the get-go.
Fantastic. Thank you very much. Really enjoyed our discussion. Thank you so much for all of that. Now I'm going to open it up to the floor for some Q&A. This is where the real test comes in. So anyone who has a question, please raise your hand. I can see some already. Fantastic. And one of us will run to you with a mic.
Hi. Martin mentioned taking some moonshots, and I would like to ask the panel what they think is the most important moonshots to be taking now for what the tech can do in 6 to 12 months?
So I really like this idea that we're experimenting with in healthcare of a kind of personalised agent for every customer that you deal with. What if there was a personalised agent running in the background all the time, making... I'm getting to the point where I need to start thinking about retirement. Is my meagre pension pot in the right places? I have no idea. I never pay attention to this stuff. I would love some of the big banks, or my big bank in particular. Sorry, it's not Lloyds. That's my wife's fault. I would love my bank to be making more proactive recommendations for me based on what's actually happening in my life. And I think you can really easily imagine a technology where we have got one agent for every customer, we have got one agent for every patient, and that those agents are actually connected to sources of data with our permission that really do enable them to make intelligent recommendations rather than just, trying to make outbound campaign recommendations that squeeze us all into one of 10 buckets. So I think the moonshots are probably in the B2C businesses right now around hyper-personalization. But I saw somebody shaking their head in the audience, so at least one person disagrees with me.
You come to Lloyds, you'll have that. because we are on it, right? I think there are many things you can call moonshot, right? But the biggest thing I think is financial inclusion. Not everybody can afford to insure their lives, their family's life, in time of when they're critically sick. Because the current model today, if you look at it in UK specifically, right, it's actually continuously changing, right? And Asia, I see this is much advanced. But in our country here, it's still you just go shop around. And then okay, if I get all of these things, this is what the cost to me is. So us being the integrated financial services company, I really want to be someone coming to me saying, okay, I can afford £50 a month. This is my priority order in which I want to secure my life, my family's life, my pets, in critical health. What can you do for me? And give it back. Right? Just turn it on the head. It needs a very different set of risk pooling, of course, right? Completely different actuarial models to really get to the pricing, all of those bits. But if we really aspire for that, right, we do serve the country in a very different way. So that's my moonshot and let's see.
Probably a bit of a cheat answer because I'm kind of using the same example as Martin, but I'll probably expand on it a bit. But I think where people would really value with financial services is just, that how do I manage my money? How do I get the most bang from a buck? Because, I think we're all in the same boat. We're paying too much tax, and we're paying, how do we reduce that? We all know what to put in the pension. What's the right amount to put in? If an agent, to Martin's point, understood your expenditure, understood what you were doing, understood your outgoings and your financial planning goals, and what age you want to retire, and if you're going to have, if they understood all that about you, they could really say, right, here's the model for you, much better than a financial advisor could today. All that data coming into an agent to understand would be the next level for me, because I think we've probably, whether it's we've got different debts that we're trying to consolidate and we don't know the best way to do that, or we've got some money in an account and we don't know where best to invest it because we don't know how long we're going to have it for because we've got to go do the house up next year. If we can bring all those complex scenarios together and have an agent manage your money for you and say, right, what's the best for you given all your scenarios, then that's a huge complex problem of outgoings and incomings, etc. I think that would be where I'd like to see banks take a shot and really, I think if you can get that right, I think that will be a massive USP for whoever nails that.
Great, thank you. That's very quickly interesting. I'll come to an interesting point that the FCA is actually looking at this exact thing right now. There's a consultation paper that's come out about the Wyeth advice guidance boundary. Yeah, and looking at that gap in the market, if you're very wealthy, you get loads of advice, you got to pay for it, but there's lots out there. But there's a huge gap where people who just don't have that there. So we're looking at Frill, we're looking at interesting companies that are looking exactly at that problem. So it's great to hear that you're aligned too. Sorry, just had to say that.
I'm going to be brave. So the title of the question is future-proofing. So I'm going to, I won't bore you today, I'm going to try to be very quick. Startup, which is about future-proofing of certain industries, which I won't go into details. But my question is, how do we go about future-proofing? Because I think that was mentioned on one of you gentlemen there. Because I think, as I think yourself said something like, you know, things are going to be very quick. But I was reading somewhere that since the humans existed on Earth, that since whatever, million years ago, the last 7 years was more advanced than all those 1 million years. It's actually quite scary knowledge. So how are we going to go forward? Because obviously it's the monies and the processes need to change. How can we, I mean, even as the consumer or just a citizen of the Earth, how are we going to adapt to this? Because it's just going so fast, speed of light, before our eyes. How are things going to be? Because you change the phone, you change your this, you change that. How can we actually stabilize these changes so that our lives are a bit more normal, so we're not panicking and just sort of going around like, so, you know, it's just, it's all difficult for everybody, businesses and the user and end users. So I'm wondering, how are we going to sort of make life simpler? I think I'm all about simplification. What do you think about the AI and things just going around us at the moment? And how are we going to sort of be more in control and not panic around and just sort of try to navigate the lives we lead at the moment? So that's the question. I know it's a little bit mouthful, but you get the gist.
Yeah, I can take a shot on that. I think the best thing is just meditate. because things around us will change. And will change at the pace that we have never seen, and they are not within humans' control, right? So we and you, like, we can't control it, right? Jokes apart, human is like, if you look at really the behavioral sciences, right? And we do use a lot of behavioral economics, right, when we do like some of the work, right, to make life easier. So ChatGPT came in 2022, really ugly, giving wrong answers most of the time. All of us probably have used it in one way or other way. If we haven't used it and you have kids, they must have used it. They're using it for answering their school homeworks. Such is life, right? It's a massive, massive change. We have never seen that kind of rapid acquisition of any tech by human in such a short span of time. But we have adopted to it. So I think the trick really here is tech is going to simplify the life. Right? The issue will be with some of the fellow engineers who are sitting here, because the systems will get complex and complicated, and the tech that you build, right, that will become tech, like complex and complicated. But that will make our life simpler. So if, going back to the example, if there is unique agent for every individual patient, I think it makes the life better, isn't it? Unless the agents start to decide, okay, keep nudging every 5 minutes. Then it will like somebody will freak out, probably BP will shoot up. But I'm sure whomsoever is building it, right, they'll build it keeping those things in mind. So I think no one knows, right? That's the real answer. Meditation is your best friend in those cases. But I think I'm in the camp where I see tech is having genuinely positive impact of masses. There are some, of course, like corner cases, but that's the camp I'm in.
I mean, it's a huge question, and I feel like we should be having that conversation in the bar with a large drink at length. And I'm also stunned that I was referred to as a gentleman. I can't wait to tell my wife. I don't panic. I don't panic for a couple of reasons. Firstly, for a lot of the reasons that Vinay outlined. I think this technology has obvious implications to improve and simplify our lives in very many cases. And the second reason I don't panic is I don't think this is close to an artificial general intelligence yet. I'm very influenced by one of the 3 AI godfathers, a guy called Jan LeCun, and he doesn't think this is an artificial general intelligence right now, and he thinks that as transformative as the current generation of technologies are, we won't get to artificial general intelligence with this generation of technologies. And I think there's some evidence for that already. If you look at GPT-5 is great, but it's kind of an incremental improvement on GPT-4, right? So I don't panic. I think this is a transformational moment. I think we all need to pay attention. I think some of this is about the choices that we make as individuals and societies. There's a frame of reference that says this is a technology like any other technology, and essentially the same technology that you can use to vaporize Hiroshima and Nagasaki can also be used to give us clean and carbon-free power, right? We have choices about how we use these technologies, and we can hold the corporations that we bank with and the governments that we elect accountable as well, and it's really important that we do those things. So I wouldn't call it a moment for panic just yet. It isn't an artificial general intelligence, at least not yet. The technologies can be used to simplify and improve our lives, and we've got agency in this conversation. We can choose not to do business with customers that whose values that we don't like. We can choose not to elect politicians who want to misuse and abuse the technologies.
I guess the only thing I'd add is in times of uncertainty, there's also the biggest opportunity. So maybe a way of looking at it, I'm not saying I've got the right answers, but maybe a way of looking at it is, well, this is an opportunity for me. I'm going to get ahead of the curve. I'm going to be the forefront of these advancements, and I'm going to use it to my advantage. You know, some will do that, and some will say, my job's at risk. I'm going to go and do something else. And you know, you can take either path, but I think, you know, as I say, when there's uncertainty, there's opportunities.
I'll just come back on that really quickly because I think that's a great point. I remember having a
have time for one more question. We've had a gentleman here waiting very patiently, so thank you for that.
Okay, so you talked about agents and LLMs quite a lot. So I was wondering how you evaluate these systems, for example, to track bias or hallucination. Could you give some examples?
That's a long conversation. I will put you in touch with my chief data scientist who spends a lot of his time thinking about these things. But I mean, there are a number of answers. Yes, we do evaluate different models in different contexts. We take the view at Teradata that some of the smaller models are more appropriate for task-specific applications, both because if they're used in an appropriate context or fine-tuned with appropriate data, they can often make better decisions than the very large language models. And also just because it's more computationally efficient. And if we think through the implications of millions of agents running all of the time, then it's absolutely in our interests that those agents are based on a heterogeneous mixture of technologies, including some computationally simpler technologies. But assessing for bias and thinking about the governance frameworks that you use to test models before you deploy them and also to stop them from doing bad things after you've deployed them is a really, really big subject, right? And some of it comes back to good old-fashioned MLOps processes. And some of it comes back to using agents and models as guardrail agents and models to try and prevent bad inputs into models and agents, and also to detect bad outcomes as well. So a bigger and more complicated subject than I can give justice to in the time available, and a topic that my chief data scientist would just give you a better answer to anyway.
Yeah, I mean, just to add to it, there's no way you can completely negate hallucination, because LLMs, which has been trained on such a vast data, there's no way you can explain this is how you have arrived to certain results. That's technically impossible today. So thinking that, okay, there's no hallucination, reduce it. Right? Because we are all using LLMs, right? We're certainly using LLMs for many, many things, right? Within Lloyds as well. So guard you to ground your, like there are RAGs that you can use, right? Feed it with the right knowledge base, right? And so that can help. There are hyperparameters. Just search Google, right? Or if you like ChatGPT, search one of the LLMs, right? It will give you probably most of the answers that you can use today.
That's a great answer. And I'll just come back on something very, very quickly. So we talked earlier about using AI for data management, governance, lineage. That's something we're doing a lot of work at Teradata at the moment, and it's really interesting. It was one of the first applications for our MCP server that we worked on. And we were very focused on the tools initially. What's the set of tools that we want to make available to the agents? A tool for space management and a tool for index selection and so on and so forth. And actually what turned out to be really interesting through that exercise is precisely because you can't stop the models from hallucinating at the moment, and precisely because the models aren't deterministic in a way that some of the approaches in traditional machine learning are, the library of prompts is as important as the library of tools. And making sure that you're intentional about the way you develop those prompts is really, really important, especially because, especially in large and complex global organizations, a lot of these models, they do make a big assumption about us all being familiar and good with English, right? And in a large and complex global organization, not everybody has English as a first language, right?
Sorry, I know we're out of time. Keeping everyone from a beer, I'm that guy. No, I guess the only thing I would add as well is it's dependent on the problem, right? You've got different kind of models that you can use that are more interpretable, and you might use them for more high stakes decisions. So in FS, like a AML or credit checker, etc., that you have to get right, and there's less that might be a bit more complex, but you can use for more analytical purposes. Obviously, you've still got the challenge of bias and stuff that you mentioned, but if it's just for analytics or marketing or something, there may be scenarios where you can take a bit more risk because getting it wrong isn't as high impact. So that's another thing to consider, just over and above what the other gentleman said.
Fantastic. Thank you so much. I know there was another couple hands in the audience. Unfortunately, we are out of time. However, I think the panelists are all staying for some networking after, so you may get an opportunity to ask them directly. So that just leaves me to just say a massive thank you to all three of you for joining the panel tonight. It's been, personally, a very interesting conversation, and I'm actually leaving it with more positivity than I have with some other events that I've been at, so that's a really great sign of a good conversation, I'm sure. And thank you everyone for being such an engaged audience and your fantastic questions as well. Again, just wanted to thank Lloyds again for hosting us here in this beautiful building and for providing the drinks, and again, Teradata for the pizza. I have been asked to share some information on some upcoming events. So on the 23rd of September, they are running Using SMART for a Real World View of Economic Wellbeing, which is an online event and free to attend. And I can't believe we're about to talk about 2026 already, but DataFest 2026 is coming back, and we're very keen to get into your diaries. So 27th and 28th of May in the Assembly Rooms in Edinburgh. If you join the Data Lab community, you will find out all the news as soon as it is launched, and more information on early bird tickets. We would love as well, just one final point, one final ask, if you could provide feedback on the event this evening. It really helps to shape future events and to give us just a bit more of a clue on topics that you want to hear about, and make sure that the community is answering all your questions as well. So without further ado, I'm not going to hold you back from drinks any longer, but just thank you very much. Thank you.